Some facts about your home and your business. Many people open their IDA accounts because they want to save for one of these three things: a home, more education, or a business. Owning a home is a big decision. It's also a big commitment. It may not be for everyone. It takes time, money, and energy to buy and keep a home. And the process of buying a home takes planning and patience. And the process can be confusing because there are many items to consider and many unfamiliar terms are used that the first-time home buyer may not know. To determine if you are ready for home ownership, you must consider the advantages and disadvantages. Advantages might include feeling a sense of ownership. Many people like the security and peace of mind that owning their home can bring. People who own their home know that as long as they continue to pay their mortgage and bills, no one can make them leave. Stable housing costs. For renters, monthly payments may go up every year. Homeowners can choose a fixed rate loan that keeps the mortgage payments the same throughout the repayment period. Appreciation. Houses often appreciate or increase in value over time. When you sell your house after living in it for many years, you can make a profit. And then tax benefits. Homeowners usually can claim the interest they pay on the mortgage of the home they live in, allowing a deduction in federal income tax at the end of the year. Disadvantages may include requires increased responsibility. Homeowners must pay for property taxes, homeowners insurance, utilities, and maintenance. You must make your monthly payments regularly to keep up your good credit rating and avoid having the lender take back your house, a process called foreclosure. In addition, homeowners are in charge of all the repairs and maintenance. A commitment to a community. Most lenders advise you that you might not want to buy a house if you think you may move in the next year or two. And there will be general qualification guidelines that a lender will use to assess a loan application. As you already know, when you rent, you don't own anything. You write your monthly check and you have a place to stay, but you don't own an asset. But there are times when renting a home makes financial sense. And that is if you have not had time to repair your credit history, or if you have a lot of debt. Because most lenders do not want your total debt, including rent or mortgage, credit card payments, or other loan payments, to be more than 36% of your gross income. And you are not sure if you want to stay in one place for more than a couple of years. Or you are not sure you want all the responsibility that comes with home ownership. Home ownership may be right for you if you have repaired or are repairing your credit. Your debt, including your new mortgage, will not be more than 36% of your income. You have money for a down payment. You have a regular source of income for the monthly mortgage payment. And you are ready to settle in your community for more than a few years. And you are ready to take on the responsibility of owning a home. Owning a business affects all parts of your life. You will need time, energy, and support to make it happen. You will also need money to get it started. And if you are saving in your IDA, you are on your way to building the startup money you will need. You also need skills to make your product or provide your service. And you need skills and knowledge to run the business. How do you know if running your own business is for you? Well, here are some questions to ask yourself. Are you tired of working for someone else? Do you have a special talent or skill you think could be turned into a business? And do you have a special physical need that makes working for someone else difficult? And have you dreamed of being your own boss? Are you willing to do all the paperwork required of business owners? If you said yes to any of these questions, business ownership may be right for you. There are many benefits to owning a business, but there are many costs too. And you will need to develop a plan for your business, like the financial plan you have been making for yourself. It helps you think through many issues and develop a solid business. It will provide you with a map for running your business once you get started. And if you need money in addition to your IDA, banks, credit unions, and nonprofit organizations that provide loans will want to see your business plan too. And you can ask your IDA program staff for an outline of a business plan to get you started. Then contact a local business assistant program for more help. Estate planning. You may be thinking, estate. What estate? But as you build your assets, you are also building an estate. This is what your assets are called after you have died. And you want to be sure that your assets go to the right people to be used appropriately. And there are two important things for you to do now. You need to make a will. Make a will even if you are just starting out on your path to prosperity. Your will is one of the most important documents that you will ever sign. In it, you can say who is to receive your property after your death. You can say what each of them will receive and when they should receive it. You also can say who is to settle your estate and who is to protect and manage any property you leave. If you have children, you also will name a guardian for your children in your will. And as your life changes, make sure your will is updated to reflect marriage or divorce, the birth of children, or any other major life changes. And get your will signed in front of witnesses. And if you can afford it, have an attorney review it. Next, you need to name your beneficiaries. If you have life insurance and or a retirement account and certain other types of investment accounts, you must name one or more beneficiary. These are the people who will inherit the money after you are gone. And the beneficiaries you name will override even your will. So make sure your will and your beneficiaries' designations agree. Ask your life insurance agent or a financial advisor for advice. As your assets grow, you may need to deal with other estate planning issues, such as how to manage taxes. You may want to leave some of your money in trust to some of your heirs. This means your assets would be safeguarded and managed and given out a little at a time. However, when you are starting out, the most important things to do are make a will and to designate your beneficiaries.